Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Good morning, guys. How's everybody doing? So let's quickly go over calendar. We only have some medium impact news today. We have Philly Fed Manufacturing Index, and then we have F1 member speaking at 9 a.m. And then later today, we have a CAD high impact news speech. So with these speeches, at least the medium impact ones, not something that I'm overly concerned about. Going over the dollar index, I mentioned to you guys that daily fair value gap last week, and we've basically rolled over since Monday. So we have, Monday basically trying to push higher. We get an inside candle, and then the following day takes out the high, and it fails to close above. And we're starting to roll over. So two levels that I'm watching right now are obviously these candles down here that don't have a wick. And that was from last week's open. So whenever we move away from those levels and we leave these candles that don't have wicks behind, I'm always mindful of the ability to actually trade back down to them. And going over another example where we see this is on YM. So if you guys watched YM yesterday, this was our weekly open. Right, so our weekly open opened, just traded higher straight away. We traded to this buy side liquidity from Tuesday, and then we traded to this from Friday. After we've taken out the Friday high, right, this level now becomes susceptible for a retracement. So after taking out this high, obviously any longs need to be extremely cautious up here because we have this candle down here that doesn't have a wick. And that's kind of what I'm expecting on the dollar index. So the dollar index has rolled over since we traded up into that daily fair value gap. Failed to create a new high up here and then rolled over. Yesterday, we were trading inside of this 4-hour fair value gap and then traded lower. So if we just take a look at Euro, right, if you went long after this bullish engulfing candle, so this bullish engulfing candle closed at 10 a.m., right? If you went long on the retracement on the next candle, put your stop loss below the low, you could have gotten out at a 3R overnight. And right now we're trading into a bullish fair value gap. I'm still expecting higher prices on the Euro. So if we just take a look at our quarterly time frame, right? This is still bullish. I don't know if we're going to trade down to these quarterly lows before going higher. But when I look at the dollar index, I'm still expecting it to get all the way down here to 90s. It's going to take some time to get down there. I don't know if we're going to run out the quarterly high and then roll over. That's still to be determined. But my overall bias is still bearish on the dollar. Now, what would really change that is if we get into this quarterly fair value gap and then just continue higher. But overall, right, all this market structure is still bearish, right? We have not broken a swing high yet. Now, the swing high that we need to lose and close above is all the way up here, which is the quarterly high. So until we lose this high all the way up here, I'm still leaning bearish on the dollar. So for the time being, right, we've already seen a nice displacement lower. Right now, I'm not really super interested in price action. But, if we respect this bearish fair value gap and trade lower, right, obviously my first targets are going to be these candles down here that don't have wicks, right? And we have this large gap down here. So we might expect a gap fill down to this level here. And if we get through that level, obviously we'll continue lower back down to these lows. So we've taken out a lot of buy side liquidity, which if you guys have been paying attention to the streams over the last couple weeks, I did mention that we have all this liquidity up here that's resting, right? So after we traded to this bullish fair value gap, we had equal highs here, right? So we've ran out those equal highs, traded into this bearish fair value gap, and then have since rolled over. So if this market continues going lower, we have downside targets that we can aim for. The pound. So we've ran out this level here, right? And we have buy side liquidity above us now. So we've taken out a bunch of sell side liquidity. So all the way back here, we've taken out all this sell side liquidity, and it's having a hard time trading lower. Now, if this weekly candle closes bullish, right, we have a lot of buy side liquidity that could possibly target to the upside. So let's say if this weekly candle closes bullish, I'll be looking at this rate on liquidity to see if we get continuation higher. Now, overall dollar has honestly just been in a range for a very long time. So if you look all the way back from like June or May, or even all the way back here, April, the market hasn't really moved a whole lot. So Forex has been pretty slow. And with FX, to be honest, you kind of need some chaos in the world. That's usually when we see currency moving a lot. But there really hasn't been anything that's really driving dollar to trade lower or higher, right? We have some rate cuts. That's understandable. But all of the narrative right now is not really based around the dollar. It's based around the equity markets and index markets. So obviously with index markets, we are, we've been trading higher for a very long time. And in my opinion, the markets are a bit frothy. Now, I would say these markets for the current year, are outperforming. So even though we had a large dip here from the lows, right, we're up 45%. That's a very large bullish move. And do we continue trading higher from here? It's hard to determine. So I am not, trading full leverage, and I'm really not even trading a lot right now because the higher time frames for me, they're not as clear as I typically want them to be. Which pair is this? I'm looking at the euro currently. Now, if you take a look at gold, right, obviously gold is just ripping higher. But with gold ripping higher, for me, that's usually a risk-off scenario, which is why I'm not trying to leverage up with index markets because they're already so high. So we're having a hard time getting through this fair value gap that was created last week. So just pay attention to this daily fair value gap. Depending on if we get through there, we do have some equal highs resting and all-time highs. Do I think it's going to get there? I don't know. The way that we've sold off from that level makes me feel like maybe they want to just continue sending this lower from here. But this is a very, very large sell-off, right? And if we have a hard time getting through 25K, I'm not expecting us to trade to these all-time highs again. But that's all dependent on how we trade around this fair value gap. But my confidence level with longs is pretty low. Now with euro, right, this thing could still roll over from where we are currently. And if it does, we're probably going to target the equal lows below us, which is why I'm also not leaning long, because we've already taken out buy side liquidity here, but we have equal lows that are resting below us down here. So when I have a scenario that could play out and, send this market lower, I'm not chasing the market higher, right? Not only that, but these markets are a little bit out of sync. So with a little bit of dollar weakness, you can see dollar CAD pushing higher. So with dollar trading a bit lower to start the week and dollar CAD's going higher, it makes, the Forex market's a bit out of sync. Because when I see dollar going lower, I want to see dollar CAD going lower as well. So I'm paying attention to this level in here today. On the euro. So we would need to respect this low down here and trade higher if this market is going to continue higher. With gold, gold is very hard to try and get into this market because we're not getting any deep retracements. It's just been pushing higher and higher and higher. Take a look at the yields. So with yields, obviously looking quite bearish, right? I kind of anticipate the dollar trying to catch up to this. How do you trade fair value gaps? You basically need to enter them as it's trading into those levels. So like here, if you see this fair value gap here on the hourly time frame, you're trying to go long as it's trading into that level. Now you can wait for the rejection. So we got the rejection here on this bullish engulfing candle. And then on the next candle, you can get long. But if you're trading a fair value gap like this, you'd want to just go long inside of it. But I usually anticipate a quick reaction away once we dip into those levels. When it kind of goes sideways like this, I don't really tend to trade them. And in general, I honestly have not really taken any trades today. I mean, sorry, this week. I haven't taken any trades this week. Just because last week's ranges were so big on index markets. And I don't have the strongest feeling about Forex. So again, I want you guys to compare all this price action that we've seen since, I don't know, May. Compare that with like last year's price action. For last year's price action, it was respecting these levels, I would say, a lot easier, and we had less of a range-bound environment. This is a total mess right now. So even if you're struggling with Forex this year, it's not like this every year. Is it possible to trade full-time with CFD prop firms? Yeah, I would say so. Compared with a couple years ago, though, there was way less rules. I would say there was a lot more firms that were paying out. How to master fake breakouts. So typically how I trade false breakouts or liquidity raids is I wait for closures back above or below swing high points or swing low points. So you're waiting for closures of candles. So if we have this swing low marked out, let's say on a daily time frame we have the swing low marked out, we take the low out, but then fail to close below it. That is not really a good sign that this market is going to continue lower. That to me is a swing failure. And then from here, we're targeting buy side liquidity. So let's say if we get this daily closure here, we have the swing point here, and I want to just mark this out here, just as if none of this price action is has happened yet. When we get this here, this is a swing point, right? Because what creates the swing point? We have a low, a lower low, and then a higher low. Right? So that is the swing point. Our first target now becomes a swing high if it's going to trade to external range liquidity. So we have this high, and then we have this high all the way up here, and then this high all the way up here. Right? Because this is all low resistance liquidity because it's creating lower highs. So let me mark all of this out. And you can see here that we have this nice little trend line here. But if we play forward, right, because we have this failure swing here, right, it's going to target these buy side liquidity points. So even though it's retracing against you, doesn't mean that that idea is incorrect, right? It just means that the market goes sideways longer than you anticipate it to, right? And this is all the sideways price action. So all of this here is how you have to try and trade around. So just for the fact that this thing turns around doesn't mean that this idea is wrong yet, because this is the new swing point, right? So this is our high time frame invalidation, right? Just like I marked out what my high time frame invalidation was for the dollar, this low here becomes our invalidation. And until this level is taken out, you should continue leaning long until we sweep out some of these levels. Right? Once it gets up here though, you're basically flat. Right? Because let's say if we punch above that buy side liquidity, well, you're not bearish on the market. Right? Because when you're taking out this buy side liquidity, does this market look bearish? Well, that's essentially how I trade those false breakouts. Is I'm looking for swing lows to be taken out, but then rejected. Right? So here we have the swing low. It's been taken out. But you can see that it doesn't have any interest in continuing lower. But it's a little bit early to try and get long on the pound because we haven't broken a swing high. So none of these candles in here, none of these daily candles are swing high points. We don't have a market structure shift yet on a high time frame. So this is, none of these candles are swing high points. The first swing high is all the way up here. So if you're trying to trade on a higher time frame, we'd want to see this level be taken out for a market structure shift. So ideally, right, this market gets above here before getting bullish, maybe trades down into a fair value gap or an order block or breaker. Well, this level here actually would become a breaker. So if we get a closure above that level here, this would be a breaker. And then we might target this high all the way up here. Yeah, basically the swing failure pattern is the opposite of a market structure shift. What you're looking for in a market structure shift is a strong closure through a swing point. So like this level here, you can see that we have the swing low here. And we get a strong closure, daily closure through that level. That is a market structure shift. But if it takes out the low and then fails to close, that's not a market structure shift. See this level here? It's all based on the closure. Right? So the fact that it trades through that level doesn't make it a market structure shift. It needs to have a strong closure below the low. Now this is a little bit dicey recently because we take out the low in a strong way, but then close back above it the very next candle. And then these daily candles, right, even though it's taking out the lows, it's having a hard time trading lower. Do I ever scalp? No, not really. My shortest time frame is usually like the 15-minute, but even then I'm holding it for 2-3 hours. How to focus more on the charts and only think about taking good setups? Well, honestly, it comes down to you actually backtesting the setups that you're trying to take and avoiding just showing up to the markets and trading. For me, when I don't have a clear picture of where the daily is trying to go, I usually don't trade. Like today, I'm, again, not going to take a trade. And if you're in here waiting for my executions, I don't trade all the time. And sometimes I wait weeks before I see something that really makes sense to me. Sometimes it's days. Because I want to find those opportunities that, in my mind, are almost guaranteed. Yes, there's always going to be a percentage chance that that setup is going to fail. But when I don't have a very clear indication of where the market's trying to go, I usually won't trade. And I'm not in the markets trading every single day, which, if you're trying to become a professional full-time trader, you're not going to realize what I'm talking about until you actually are trading full-time. Because once you go full-time, this is what happened to me. I quit my job, went full-time trading, and I thought I needed to spend 8 hours a day in front of the charts. I made more money spending 2 to 3 hours a day in front of the charts than I did spending 8 hours a day. Because more work, so everybody is so programmed to work 8 hours a day, right? Everybody is programmed to work 8 hours a day because that's what your jobs require you to do. 8 to 10 hours a day, right? You're doing 40-hour weeks. But in trading, that usually doesn't equate to more money. And that's the hard part about transitioning to full-time trading, or just understanding in general how professional traders operate in the markets. They're not in the markets every single day. We don't trade every single day. There's some days where we don't do anything. Is there any news today? Yeah, there's only some medium impact news. So we have some medium impact news out in 8 minutes. And then we have a speech at 9 a.m., but they're just medium impact. But since Tuesday, right? So Tuesday we took out Monday's low. We have our daily low down here. Tuesday took out Monday's low, had some accumulation, and then we have this markup. Then we have some sideways price action, and then we have some markup. This is just a retracement, taking out London session lows, and then trading higher. Finding the trend based on the time frame. How do you find the trend based on the time frame? First of all, you have to understand what type of trader you are. Are you a position trader? Are you a swing trader? Are you an intraday trader? So I always use 3 different time frames, and I'm trading all these different styles. So if I enter a trade based on a 4-hour time frame, I am not going to manage it on a 5-minute. All right, because let's say if I take a trade on a 4-hour time frame, and let's just say I go long here and put my stop down here. And I'm expecting us to run out this liquidity all the way up here. Do I know how long it's going to take to get to that level? Each one of these candles is 4 hours, right? So 8 hours from now, this market might not move from where we are. 12 hours from now, this market might not move where we are. I know everybody wants to enter a trade and it goes straight to your take profit right away. The markets don't operate like that. Just like I talked about the which chart was it? Yeah, this is the euro. So let's just say you went long here on this daily candle, and you went long because this market is still creating higher lows, but this is low resistance liquidity, right? If you're still bullish on this market, and let's say you're aiming for a 2-to-1, and you're putting your stop loss below the daily low, and you enter on the close, how long am I going to have to wait for it to trade to that level? This is the part of trading and uncertainty that you have to accept when you're placing a trade. Like, how many days does it take to actually reach this liquidity target, which is like a 1-to-1, or even up here, which is like a 1-to-2, or all the way up here, which is like a 2.5-to-1? You got 1, 2, 3, 4, 5, right? When it's back here and it's just chopping around on you, are you going to exit the trade? Are you going to overmanage your stop loss? Are you going to try and size in? Are you cutting your losses too early because you're nervous? It's already been 5 days that you've been in this trade. 5 days, guys. 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 days. You're in this trade for 2 weeks before it runs to your target. But let's say if you take this on an hourly time frame, you're going to be in the trade for 14 hours. If you're on a 15-minute, what's 15 minutes times 14? You're in it for 210 minutes, which is like 3 hours. All right, so this trend, it's based on the time frame that you take the trade on. But you should be managing it on the same time frame. So let's say if you use a 15-minute for execution, you should be managing on the 15-minute and not drop down. So what I used to do was I would take a trade on the daily time frame and then all of a sudden find myself looking at the lower time frames. For what reason? The problem was when I found a daily setup like this, I would be in and out, in and out, in and out, in and out, in and out of these trades. And I would probably be down 5R. Instead, if I just took 1R risk and just left it alone and did nothing, this trade would have paid me out 2.5R. Right, and that's the patience side of trading that not a lot of people have. So more often than not, you guys are better off just setting and forgetting your trades. So if I were to enter this trade right now, do I really know how long it's going to take before it trades to this level? No, I don't know. It could take multiple days. But the fact that I have 1R risk on should not, change my decision making. Accept the fact that I have 1R risk on and wait for this market to trade. Because it's going to fluctuate. It's going to go up and down, and it's probably going to drive you crazy. But you're not trying to overmanage the stop loss, and you're not trying to think about the trade too much. So what happens is usually you enter the trade, now all of a sudden you're sitting there with your phone in your hand, right? And you can't sleep, and you can't think about anything else because you're so attached to the outcome of the trade. Whereas if you just place the trade with proper risk, and let's say you're only going to manage it if it goes to 2R or 1R, and until that time happens, you're not doing anything. That is where most people mess up, is that they can't sit and wait patiently with money fluctuating in and out of their account. What's my best setup for scaling into trades? So basically, whenever we get a strong push away from specific levels, and I'm able to manage the trade and find another place to put my stop loss. But it needs to be logical. It's not just if this market goes in my favor, I'm just all of a sudden jamming the stop loss up. Right? It needs to create new swing points. It needs to trade away from specific levels. So let's say, based on this engulfing candle yesterday that I went long. So you say I went long here. My stop loss is below the hourly low. And let's say I'm targeting, I don't know, this gap that's all the way up here. Right? There's a gap all the way up here. I think it's going to trade to all the way to that level. I'm not just jamming my stop up as soon as it moves away. Right? I need to see new fair value gaps being created. I need to see new swing points being created. So let's say we're here, and now I'm comfortable moving my stop loss below this low because it created the fair value gap. Or let's say you even want to move it all the way up here. But we have two new levels that I can expect is going to be respected. So let's say I want to put my stop loss here. I'll add another position where we currently are, put my stop loss here. So if this first position gets stopped out, I'm in profit. But if this new position, right, let's say this new position is going to offer us 4R. This new position, I'm only risking 1R on. Well, I'm going to make money on this first position. So let's say if I get stopped out, I'm losing 1R on the second position, but I'm making a little bit on this first position, right? That's not a full R loss, right? So that's how you properly scale into trades. But it needs to make sense. It's not just as soon as this market runs away, I'm adding. There needs to be logic behind why you're adding in. My settings for the ICT everything indicator. It's basically default settings, I think. Midnight historical lines on. Opening price lines at midnight. Opening price lines for the weekly. And then just the Asian range. I don't use CBDR or flout anymore. Just the Asian range. I don't think you need it. They're very similar. Is gold overbought? Well, if this trend is just going to continue higher, I would not be the first. I would not be trying to short it. So if this market is just going to keep going higher, you just want to continue riding the trend until you see a higher time frame market structure shift. Right. So when you look at this, you know, these dips here, it's not taking out any swing low. This here is not a swing low. Right? Because you need to have a higher low on either side of it. This here is not a swing low. Right? You need to have a higher low on either side of it. It's just trading down into fair value gaps. How many trades do I take in a month? That all depends. I usually operate at my best when I'm taking 2 to 4 trades a week. Now, I might take 2 trades in a day, but it's with one idea. So if I have a higher time frame bias and I go long and I get stopped out, I might give it another opportunity to go long again in that same day. But I consider that as one trade idea. But I usually only have 2 to 4 trade ideas a week. So like I mentioned, I want to see if dollar is going to continue rolling over from this fair value gap you have here on the hourly. The daily fair value gap that we're in right now. No, I don't really expect that this is going to send it higher. And my reasoning for that, though, is because we have these levels down here that don't have wicks. And I think if it continues rolling over, we're probably going to target these levels. So my eyes are going to be focused on this. And when I look at the quarterly time frame, right, if I just remove all this, we have any clear shift of market structure going higher? No. Last quarter created a lower high and a lower low, even though it closed bullish. And we're contesting with this level here. Right, so we have this bullish fair value gap, but it completely took that level out. So in my mind, I want to see it trade down to these lows. Right, because we've ran above this high and failed to continue higher. This here is my swing failure. So I'm just looking at all these traders that went long on the dollar are now trapped. Right, and usually when they trap traders like this, it takes out the opposing end of the range. I just don't know how long it's going to take to get down there because this is a quarterly time frame. Right, so each one of these candles is 3 months. I mean, look how many months it took to go from this price where we were previously down to here. Right, this took 6 months. So each one of these candles is 3 months. Am I in an E long? No, not at the moment. I mean, I want to talk to you guys about like burnout, because for me, I was so hyper focused earlier this year that, to be honest, I have a hard time even just sitting in front of the charts and trying to take trades, because that was so draining for me for 4 or 5 months. I was just dialed in, hyper focused, and I didn't have a bunch of stuff going on. Right now, I'm trying to do like 3 real estate projects, and my mind and my focus is not on the charts. And usually when that happens, I usually tend to make mistakes. Can I check New Zealand dollar? Yeah. So right now we're also in a bullish fair value gap. And a lot of times I'll just trade in the direction of the previous day. So here yesterday, during the Asian session, we got this nice run higher. This to me just feels like it's just a small retracement before our next leg higher. All right, because we're looking at the footprints that's being left in the market. We have this here, right? On this Tuesday, we have a bit of a V-shaped reversal. So we have all this price action going lower, but then basically erased very shortly after. And then we have some sideways price action, and then we have another leg higher. So the way that I view that is that they're trying to buy this market up currently. And there's a lot of liquidity that they can target to the upside. But again, I'm not really interested in taking this trade because the dollar CAD is not really trading in sync with what the dollar is doing. The euro pound. Pound is obviously, even if we just take a look at the daily change, the pound is stronger than the euro at this current moment. Do I check the COT data? No. The problem with COT data, let's say COT data really is only good for like position traders and people that hedge, because a lot of that data takes a long time to pan out. I personally am not waiting around for COT data to pan out. Mainly just trading technical. Oh. So for me, index markets are a bit of a mess because of all of this price action from last week. The DAX, I don't know. I don't follow these markets, guys. I know my watch list looks big, but I'm basically only trading 3 to 5 names that are in here. The euro, the pound sometimes, or one of these. So sometimes I'll take a New Zealand dollar or Aussie dollar trade. And then NASDAQ and ES or YM. Did I get enough sleep last night? No. My bias for NASDAQ, I'm basically neutral. And maybe that's the differentiating factor between professional traders and traders that are having a hard time, is that we're not trading every day. And if I don't have a bias, I'm totally fine with not having a bias. Guess what I do? I don't trade. So right now, when my bias is like 50-50 in a lot of these markets, I don't trade. And I don't know when it's going to really open up. because I've been 50-50 for quite a long time. When I'm trading index markets, I'm basically just trading it day to day. But with a lot of these markets, for me, it's been much more difficult to determine where it's going to go in the next couple weeks. An engulfing candle after taking out a lower high, it's usually just one candle. So an engulfing candle requires two candles. The candle prior to it, and then this one specific candle. So here, right, it took out the low and then took out the high. Those are two candles. Right, but they do fail if you're not on the right side of the market. Because we have this bearish engulfing candle here. But the fact that this market is bullish, that fails, right? So we have this bullish engulfing candle here, which is why I have this low here marked out where I don't want to see this low be taken. But I don't like the fact that this hourly candle came extremely close to taking out the engulfing candle low. Right, this low here came very close to taking out the engulfing candle low. Yeah, it is 50-50 because we have those equal lows below us. But it's also when I just don't have a clear idea of where the market's going to go. Like I need to have a very clear target where I think the market's going to go. Now, I do think the dollar wants to trade down to those candles that don't have wicks. But the way that it gets there is kind of what I'm 50-50 on. So we had news come out at 8:30. There wasn't much of a response. Gold crash is coming. Listen, until it rolls over, I would not be trying to short gold. You're going to lose a lot of money in your career if you're the first person trying to short a market. All right, the trend is your friend. But to be honest with FX, there really isn't a trend. This thing is just sideways. So just zoom out on your charts. Like, does this really have any direction to it? There are lower time frame moves, but these, in my opinion, are not trends. This is not a trending environment. This is a sideways consolidation. All of this. Oh. So after this long wick here on the 4-hour time frames, it does feel like we're going to trade to this buy side liquidity on NQ. When do I confirm the re-entry in a profitable trade? How do I always seem tired? Because I've been busy, guys. I've been busy. I'm in the process of a full home renovation and buying another property. And I have a lot going on in my other businesses where, again, I'm not putting 100% of my energy into trading. But you guys are going to go through these cycles too. You're going to feel like you're burning out in the markets. You're trading every single day. And then you never give yourself a time to reset. For me, I already made what I needed to make for the year back in April. I could have stopped in April and probably not traded for the next 2 years. Because when the markets are very volatile and you know where they're going, and I had a very strong conviction of where they were going earlier this year. Right, so if I go back to this price action from earlier this year, right? I basically traded all of this. So on the way down, I was trading this, right? Taking out these equal lows down here. And then after we took out these equal lows, I traded it on the way up. So I traded all of this. But then the market goes through slow and choppy price action, even though it is going higher, right? Compare all of this price action, right? All these days in here. This is all very sideways compared to this move, these moves here, right? This is very clearly going lower, and then this is very clearly going higher. But then it's just kind of grinding slowly higher. Right? This is really not where I'm making the majority of my money. When markets are in consolidating price action is not when I'm making the majority of my money. And it's me recognizing those conditions and being okay just sitting out of them. How many hours should we spend on the charts daily for good results? Well, what does your data tell you? For me, my data told me the more hours I spend in front of my charts, the worse I did. So that automatically forced me to just trade like 2 to 3 hours a day. Now, that might look like you placing a position and just walking away and doing nothing. Because let's say, does this trade change? Let's say you went long after this engulfing candle. You put your stop loss here and you're targeting a 3R. Does the trade change by you sitting in front of the charts? You sitting in front of the charts, is that going to create this price action? Does it make any difference if you're in front of the charts or not? Right, so me entering this position might only take an hour or 2 hours, paying attention to the markets. But once I'm in the trade, I don't have anything else to do other than wait and manage it without making any mistakes. And that's what you need to figure out. Like me, I would be very quick to maybe overmanage the stop loss. Earlier in my career, I would be very quick to overmanage my stop loss. Let's say if it jumped in my favor and then all of a sudden I put my stop loss to here, this hourly low, and then it gets stopped out and then goes in my favor. I need to write that down in my journal, especially if it goes to my target. Because what does that tell you? What does you moving your stop loss here tell you about your trading? Is this that you're impatient? Or your trade management you're micromanaging the position. And usually what happens when you sit in front of the screens is that you end up micromanaging your positions. You don't give the market the room it needs to breathe. So you use a 4-hour PD array to 15-minute entry. According to you, what should be the average hours for average on one trade? It's probably going to be anywhere from 1 to 3 hours or more. Because if you have a 4-hour PD array, you might be in that trade for quite a long time. Let's just say for here, for example, and this is just you guys going through your charts and actually studying this. Let's say you went short from this 4-hour fair value gap. Let's say you went short as soon as it touched it here. You went short on this spike higher. And then you put your stop loss, I don't know, above this candle's high. How many hours does it take to get back to this candle low? And you're targeting a 3R. So even if you enter on a 15-minute, but you're using a 4-hour PD array, let's just hop over to the 15-minute. Look at all this price action you have to sit through. All of this. How many hours is that? You're talking about from noon all the way till London session the next day before it actually starts moving towards your target. Right? So as soon as you enter it, how long do you have to wait? 4, 8, 12, 16, 20 hours before it goes to your target. But that's the thing with trading is that every trade is different. You can't just anticipate, I'm going to enter this trade and it's going to be 3 hours. You just have to assume once you enter the trade, you have no idea how long it's going to take to start moving in your favor. That's the uncertainty you have to deal with. The only thing that matters is that you're framing a proper risk to reward, and then you're not going to overmanage the trade. Because every trade is going to be different. Yes, on average, it's going to come out to X, right? Maybe it's going to be on average, my hold is 1 to 4 hours. But then you're going to have the outliers where you're going to be in that trade for 20 hours. But let's say if it goes 3 hours and it doesn't do anything, are you going to close the trade? Me, I probably won't. I'll probably just leave it open. Because again, I cannot control what the markets do once I enter the trade. And if psychology is something new to you guys, I highly recommend listening to like Mark Douglas's workshops. If you just type in Mark Douglas workshop on YouTube. Watch this playlist. All right, he basically walks you through everything that I'm talking about right now. Once you are in that trade, you have no idea what the market is going to do. There can be one trader, one big trader that negates your idea. But that should not affect your decision making. So let's say if I enter this long right here, based on this fair value gap, do I really know how long it's going to take to, let's say, maybe trade up to this gap all the way up here? I have no idea. But how many mistakes are amateur traders making on the way to get to that level? That's the difference between a profitable trader and somebody that isn't profitable. So let's say if I go long here and I put my stop loss, below here. My target's all the way up here at the gap. Do I know what the market is going to do on the way to get to that level? No, I don't. It could trade up to the Asian range highs and then dump. It could go straight to the take profit. It could go sideways for a very long time. Right? Those are all the scenarios that you honestly should not be putting too much attention into. Like, don't think about the what ifs. You should have a scenario for if the market doesn't move in your favor, or if it does. What am I doing in both scenarios? Those are the only things that you can control. You cannot control what the market does, though, once you're in the trade. It could run to the take profit in an hour, 2 hours. It could take multiple days. But in my opinion, you sitting in front of the charts, let's say once you place the trade, you sitting in front of the charts often does more damage to your account than if you were to just go about your life doing something else. And this is what I had to learn when I was working a job, trying to become a full-time trader. Is that when I placed a position, I don't need to be babysitting it. Because I became a profitable trader before I left my job. And when I was at my job, I had meetings all day. I had other tasks that I needed to do throughout the day, and I couldn't just sit in front of my charts and watch the trade all day long. But that's actually what made me profitable, was when I placed the trade and just accepted the outcome, whether it was a win or a loss. Because again, I can post my Tradify P&L, I could post my Apex P&L and my statistics behind both of those. I only had like a 40%, 35% win rate. Because I was okay with accepting a loser. But I was also okay managing the risk. But I wasn't micromanaging the trade. All I could do is make a really good decision over when am I going to move my stop loss versus when am I going to just sit tight and do nothing. So we are getting that response from this fair value gap. Let's say you enter a trade right now. It's already Thursday. You might have to hold this trade over the weekend. And you should be bored. Honestly, if you take this trade right now, it's going to be boring. But it's about what you do once you're in the trade. Like, am I going to sit here and overmanage it? Or am I going to try and scale up too quickly? Right? Because if you start adding into the trade, now all of a sudden you're not comfortable with the risk and where the stop loss is, you're going to get stopped out usually before it goes in your favor. What do I do on my non-trading days? Well, I do other business work, right? I'm working out, basically just enjoying my life outside of the charts. Because what happened was when I went full-time trading, all of a sudden now I'm just a slave to the markets again. And that's the whole thing that I was trying to avoid by becoming a full-time trader. I'm not trying to have another job, right? Oftentimes I'm trying to make my profits for the week and be done. If I make my profit on Monday or Tuesday, I wasn't trading for the rest of the week. Because you want more, that's just greedy, right? Let's say if you're up 3 to 5R, or maybe 6 or 7R on Monday or Tuesday, what would happen was I would continue trading throughout the week. The setup quality would be way low because the move already happened. And then I would give it all back by Friday and feel terrible about it going into the weekend. Instead, if you're just content with what you make during the week, this is a very hard thing to do because you don't know when to pull the plug because it feels like the opportunity is always there, which it is, and that's why you should step away. Is because there's always going to be another opportunity. You don't need to be in the markets all the time. There is always going to be another opportunity. Even if I just take the next 2 months off, the market's going to be there next year. And if it's not, you have bigger problems to worry about. But the problem with most traders is that they think they need to be in the market every single day. And if they're not, they're missing out on opportunity. But it's a very quick way to burning out. How do I identify a burnout? It's just based off of knowing yourself. I don't know. And maybe if you're younger, me, I'm 35 years old, so I know I'm gonna burn out. It's just life experience. Like I know how hard I can push when I'm in the zone, but I know when to take my foot off the gas when I'm not feeling it. Where are my projects? I'm not telling you. I'm gonna tell you where my projects are. Aussie's in a key level. The reason why I wouldn't trade Aussie is because it's the weaker asset. So if I'm trying to be long on any of these assets, I would choose New Zealand dollar over Aussie dollar. Or I would choose the pound over Aussie dollar. I would even choose the euro over Aussie dollar. Because if I want to see dollar go lower, right, which it is currently, why would I choose the weakest asset to go long? You're trying to choose the strongest one. So the pound is obviously the strongest out of all of those currencies. I would even choose the euro over the Aussie. If I had to choose, would I choose FX or NQ? I would probably choose NQ because the volatility comes like in the morning session. And it allows me to get off the charts faster. Euro looks like the most strong. It's not though. Look at what does this number say? What does the day change? This is 0.10. This is 0.31. Pound is the strongest. No, I didn't take any trades this week. When did I start trading? I started trading in 2011. Long time ago. I made more money with NQ. But Euro just had a 4-hour closure. The lows are stronger. I'm not sure what you mean. Just look at the daily change. Daily change, the pound's going higher. And if we look at euro pound, it's very easy to tell which one's stronger. Euro's weaker, pound is stronger. Otherwise, this market would not be going lower. And this daily change would be flipped. Like the euro would be up 0.25%. Liquidity is clean. It still doesn't matter to me, guys. I'm still going to trade the stronger asset. Your technical analysis, it needs to make sense, but also there are stronger assets. Like, why would the Aussie be down 0.2% if it was going to be the market to trade going higher? Let's say if you enter right when the daily candle roll over. Which market would you rather trade, guys? Right now, you'd be up the most in the pound. It's the data is right in front of you. Why would I try to trade the weakest asset when I'm bullish? That to me doesn't make any sense. Just because you want to trade it, that like what you want out of the market is not what the market is giving you. Yes, I always do that. I cross compare the pairs with each other, trying to find the stronger one. When trading a 5K two-step account, which lot size is okay for discipline's sake? I mean, it sounds like you're trading a futures account. You should be trading micros. I mean, micros, even one micro doesn't really give you a whole lot of breathing room, because with a 5K account, you're probably not getting a whole lot of drawdown. Getting what, $1,000 maybe? I don't even know if you're getting that. What does my risk management look like? I'm usually risking 1R. Does it really matter what percentage that is? When you look at your drawdown amount, you should be trading based off of how many losers you think you could sustain in a row without blowing the account. So if you have $1,000, or if you have $10,000, or if you have $100,000, if this is your drawdown amount, you're trying to determine, like, okay, I want to have 20 trades before I blow that account. That's how you determine what your risk is. And that's how you determine what your position sizing should be. Maybe you want to give yourself even more of a leeway. Okay, when I had multiple FX accounts, and I'm talking about like 20 to 30 FX accounts, I was trading 0.25% across all of them. Why? Because the more and more you reduce your risk, your risk of ruin actually goes down. Okay, so let's say if you took this drawdown amount, now all of a sudden you want to take 10 trades on each one of those accounts. What does that do to your risk of ruin? And what is risk of ruin? It means the risk of you blowing your account. It goes up. Your risk of ruin goes up the less trades you give yourself. It's simple math, which a lot of people don't even attribute trading to math. Right? There's certain probabilities that you trade with, risk rewards that you trade with, and that's what's giving you statistics. But I bet 75% or more of you listening to this don't journal. I bet you just show up to the charts and trade without any rhyme or reason, and you wonder why you're not profitable. Because you have no data, you're treating this like a casino, and you're not treating it like a business. And you're not accepting of the fact that you could lose in these trades. $1% risk depends on every trader. Every trader is going to be different. And I don't really look at percentages. I look at R value. Because let's say I'm worth $2 million. Just for hypothetical. Let's say I'm worth $2 million and I have that in my bank account, but I only put 100K into my trading account. Is it bad risk for me to take $5,000 of risk? It might be 5% of this trading account, but from a percentage standpoint of my net worth, it's not even 1%. Right? 1% would be 20K. So I'm not looking at percentages the same way as some of you guys are. I'm looking at it like this. How many trades am I giving myself? Because when I look at my data, I know that I'm not going to lose 20 trades in a row. But I might lose 5 trades in a row. Well, let's say if you're only giving yourself 10 trades before you blow the account, and you lose 5 in a row, that essentially means that you're down 50%. Whereas if you gave yourself 20 trades in a row, you're only down 25%. Right? The less risk that you have, your risk of ruin goes down. Should you be reading your journal every single day? I wouldn't say you need to read your journal, but you should be journaling every single day. even if you're not trading, just to get your thoughts out on paper. Because the way that you should be going about your trading is that you're trying to improve at all these different things. And being honest with yourself is one of the fastest ways to improve. For me, a lot of it was emotional journaling. Like, did I get angry after a trade? Was I anxious during a trade? All of those emotions actually lead to decisions that you make on the charts. So if I'm anxious, maybe I'm micromanaging my trade, right? That is a very straightforward trigger, right? There's an emotional trigger and then there's an action that you take in the market. If you're anxious, a lot of times I would be jamming my stop loss up because I'm staring at the P&L and I feel very uncomfortable about the trade and where it's going. That anxiousness, when I feel that, I know I make this mistake, micromanagement, right? And if you could tag that and journal that, over time you're going to realize like, hey, I'm anxious and I'm making this mistake. And that's how you improve. Or let's say if you're angry at a trade and you go back into the markets and you take a loss, that's revenge trading, right? So when you feel anger bubbling up, because these emotions that you can't control, if you get stopped out, you're going to get angry. But if you know how to manage that, right? If I get stopped out, I feel angry. What is the action step do I take to avoid doing the next mistake, right? To avoid over trading. For me, it's getting off the screen and going for a walk, right? Very simple problem and solution. So for me, journaling, I learned a lot when I started emotionally journaling. So I have in TradeZilla, I tag my emotions. How do I feel in this trade when I place it? Do I feel calm and confident? Because those are the two tags that I will place on trades when I know I'm going to operate in the right manner. Calm and confident about my analysis, about my processes, about how I'm going to manage the trade. But if I feel anxious or feel angry or feel tired, that's usually when I make the most mistakes. Do I have a trade limit per day? Yes. 2 trades max, but it's usually one trade idea. I'll usually come into the day with one trade idea. I'm very rarely switching biases and going the opposite direction. I've just lost way too much money doing that. And it's hopefully something that you guys recognize early as well. Is I'm only trying, if I have an idea for the day, I am only trying to trade in that one direction. Because I find when I'm flipping back and forth, let's say if I was long coming into the day, and then I see a bear set up and I go short. I'm not confident about the trade, so I mismanage it or I over leverage because I don't know, I feel some type of way. Or maybe I was long earlier in the day and then it goes short against me and then I go short. And if I had just stayed long, I would be profitable. So Alpesh is saying, I've faced an issue with holding my trade till the profit target, especially when the price is nearing the target. I end up closing the trade manually and it always hits my target. Well, think about this. How close is it to your target before you close? Because let's say if you're up and it's all the way up here, right? What is the difference between here and here? Right? If it's only, let's say this is 4.2 and this is 4.7. Are you really gonna feel bad about giving up 0.2R when you've made 4R? To me, that doesn't really make a difference. So I don't necessarily always need to have my trades hit profit target. Maybe I've been in the trade for long enough and I'm tired of holding it and I want to exit. It can be as simple as that. But your decision making should support your data. Because if I know I'm always trying to aim for a 1 to 2 or 1 to 3, I'm usually not going to touch anything until I'm up 2 or 3R because I know long term I need to have my winners pay for the losers. Right? If I hit a trade that's 3R, now all of a sudden I can sustain 3 losses and be back at break even. Right? But if you have multiple trades in a row that's doing 2 to 3R, right? You can see where that equity curve starts pointing in the right direction. So I'm gonna hop off here, guys. I've already kind of gone over what I'm expecting. Index markets I'm kind of sideways on. But euro, I want to see trade higher, and dollar, I want to see trade lower. Do I think it's gonna do it? I don't know. But these are the downside targets that I have in mind for dollar index if it continues lower. And that's what I'm going to be watching. If this market does want to continue rolling over and trading towards these candles that don't have wicks. All right, guys. So I hope you guys learned something from this. You know, I'm sharing what helped me as a trader. What helped me was just slowing down, not taking so many trades. When I enter the trade, I have to manage it appropriately because I don't know how long it's going to take for this market to start moving in my favor. Right? That's something that nobody really knows. If you knew how fast markets were going to move and what they were going to do next, there would be so many more people making money in the markets. But the real professional traders are the ones that are okay placing the position and just sitting with it for long periods of time. Right? Because think about the guy that maybe went short on the retracement here, but then has to sit through all this. And in between all of this, they're in and out, in and out, in and out, in and out. Just taking small losses, 1 hour losses, 1 hour losses. They're short, they're long, they're short, they're long, they're short, they're long. Whereas the guy that just went short and just didn't do anything and exited down here is making way more money and is in a much better mental state. Right? Because all they had to do is make 1 to 2 decisions. They enter the trade, maybe they figure out where they're going to manage their stop loss, and that's it. Right? You don't want to be in the market just randomly guessing on every little move that goes up, down, up, down, up, down. And then you're chopping your account equity alive. Like your account equity is doing this. It's just slowly drifting lower. It's not major losses. You know, they're not big losses. They're just you making poor decisions and trying to micromanage the markets. All right, so that tip for the day, slow down when you're trying to trade. All right, stop thinking so much about when the next payout's going to come. Stop thinking about when I'm eligible for a payout. All that stuff does not matter. Right? What matters is being present in the moment. How do I manage the trade that I put on? Right? How do I manage the emotions around seeing my trade maybe go 1 to 2R and come back on me and break even? And being okay with not doing anything. Maybe you're just leaving your stop loss alone. That is, to me, the real sign of graduating in the markets. And it's a real sign of maturity in the markets, understanding the numbers behind a profitable strategy. Right? Because all this is just a 1R risk. That's the way that I look at it. If I take a position right now, it's just 1R. Do I really care if it goes and stops me out? It's just one small data point in an equity curve that is hopefully pointing higher. But you have to accept the probabilities that you are going to have losers in the market. That's just part of the game. But that's why you have a stop loss. The stop loss is what's really protecting you. And that's how I determine what's going to be a loss. I very rarely will see the market trading against me and being negative 5R. And do I close it? You know, very rarely do I close it when it's just kind of chopping around. Because the stop loss for me is the area where the trade is invalidated. But if it's just going sideways on me, the trade hasn't been invalidated yet, right? Because imagine what your mind is going through when you enter short here, you're up 1R, and then it comes back on you, break even, and you exit. Right? Maybe you go long, and then it goes against you, and now you're down 1R. Right? And then you short it again, and then it just goes sideways again, and then you take a 2R loss. Whereas if you just assume that you're putting 1R on and you don't care about it, and I think that's where my profitability came, is when I just stopped caring so much. Just stop caring so much about the outcome of each trade, and you will do much better. All right? Don't overthink it. Don't overanalyze. Just trade, be okay with the outcome, whatever it is, and move on to the next trade. Right? Journal your emotions, journal your thoughts. Did you follow the plan? Because let's say if I went long here and it gets stopped out, I follow my plan. Does it make it a bad trade? No. Right? And that's the difference. A lot of people are focused on the P&L, right? They equate positive P&L to proper trading, and that's not the case. You could break every rule in the book and have a green P&L. But does that mean that you're a good trader? To me, it doesn't. Because longevity wise, if you're breaking every single rule, those profits are going to disappear very quickly. So I hope you guys have a great weekend. I'll catch you guys all next week, and hopefully you guys learned something from the stream, sharing my experiences, and hopefully you can, find ways to improve upon what you're struggling with right now. All right, guys. So until next time, have a good one. Take care.